Love it.
Use camera.
Everybody, please have your microphones on mute unless you are answering a question or giving your speech, please. So glad to see everybody in here. All right. Everyone having a good Wednesday? Yeah.
Busy. It's just busy, right?
Yeah.
Very busy week.
It's
Yeah.
Just looking for a day off,
oh,
wherever that
and
is. Wherever that is.
What is that? Christy, are you in San Francisco? Let's go. I want to be there. All right. Thank you, everyone, for joining us. This education session will be interactive at certain points, so you will get to answer questions or answer polls or be involved.
going to be exciting and fun. That's key. Right, Lisa?
Hi, Renee.
Yes.
Hi, who am I saying hello to? Hello.
Definitely gonna be a lot of fun and interactive. So
Yes.
It's me, your favorite troublemaker.
Aw, Camille, how are you?
Hey, honey.
Long time no see.
I know. I've been trying to stay out of trouble. It's not
Aw,
working.
that's no fun, Camille.
Camille,
What?
we miss you. I miss you.
Oh, well, thank you. I've missed you guys too. It's been a fun.
Camille, I
It's
really
been
miss you.
Who is that? Hi,
Is that
Beth.
Beth? I hear that voice.
Hey, darling. Oh, so this is a meeting you told me you were to call you after. Got it.
Yes, thank you. I'm going to mute myself.
Okay, me too.
Sorry, Angel. I was trying to figure out how to turn my mic off and it wasn't working, but let's go to San Francisco. Yes, I'm ready.
All right. All right. Do it.
Well, I'm in Michigan. You guys could come to Michigan. Visiting family on vacation. And it's beautiful. It's like in the 60s here, so it's really nice.
Too cold for me.
I was going to
No.
say the same thing, Beth. I was like, oh, it's a little brisk for me.
No, it's beautiful. I love it.
What
Not
part
when
of
you're always
Michigan are you
cold.
from?
I am from Detroit. I grew up in Detroit, but we have a farmhouse north of Detroit, an hour and a half on Lake Huron.
Oh, nice. I'm in Florida, in Miami, but I am from Michigan. I grew up in a small town called Fairhaven between New Baltimore and Algonac.
Oh my, I'm in Lexington, Michigan. That's where we have our 40 acres here in Lexington, north of Port Huron.
Yes, I know. I've been there. Yes, nice.
Yeah. And who am I speaking to? I can't even see.
No, 'cause I don't have my camera on, but it's
Oh,
Mary Marie from
oh, that's
Women's
awesome.
Council in Miami.
Oh, well, that's so cool. We'll have to catch up later about
Yes,
Michigan.
yes.
I love that
Yes.
connection.
Thank you.
All right.
All right, Angel. Did we get Mark in yet or not yet?
No, ma'am, but I think with time we need to.
Okay.
I think I'm in.
Oh.
I'm here.
Oh, it says Lisa Stewart on your name.
Nah, it should be me.
Mark, you have to. I know Lisa Stewart is such a famous name.
I'm in. I logged in under me. I put my name in and everything. So
That's okay.
I'm here.
Go into your three dots up at the top, Mark.
Okay, hang on one second.
And you'll see it says rename, and you can put your name in.
Okay, hang on. I'm in my car and I'm getting ready to park, so I'll do that as soon as I park. Give me a second.
Not a problem. Not a problem.
Oh, at least we know who you are.
Yes.
And welcome.
Thank you.
So I think we can start. Angel, Lisa, you guys good?
Yeah, let's go.
right.
All right. Well, welcome everybody. My name is Renee Beechler and I am from Naples on the Gulf. And I'm a DVP and I happen to also be the Florida State Education Chair. And we welcome you on behalf of our committee, our Education Committee. So thank you so much for attending this event, this session, as well as all the sessions all year. So we're really excited about Deal or No Deal on appraisals and lending. And first, I'd like to just start with the introduction of our moderators for the day. And bear with me. Let me get this out of my way. Oh my gosh. Here we are. So I'm going to start with our dear Lisa Stewart. Here's her bio. After moving to Florida from Boston, Lisa Stewart began her career working in social services as a social worker and advanced to training specialist with the state of Florida before venturing into real estate more than 30 years ago. Today, Lisa is a dedicated real estate leader, educator, and advocate committed to empowering professionals through leadership development, education, and community service. At her local realtor association, Lisa currently serves as a corporate board of director and vice chair of government affairs. With Women's Council of Realtors, she is a district vice president and 2026 chair of the LEAP leadership program. As a faculty member for Florida Realtors, Lisa teaches fair housing and promotes ethical business practices, inclusion, and equal opportunities in homeownership. Her passion for advocacy extends through her service as a Florida Realtors key contact for the past 3 years and her work on the Affordable Housing Advisory Board and Diversity and Heritage Board for the city of Pembroke Pines, where she supports initiatives that advance access, equity, and leadership growth within both the real estate industry and the community. A true believer in the power of collaboration and education, Lisa inspires others to lead with purpose, integrity, and heart, leaving a lasting impact on the real estate industry and the communities she serves. So welcome, Lisa. We're so proud to have you. And our next moderator is Angel Decker. Angel Decker is a realtor based in Palm Coast, Florida, specializing in new construction and resale homes. With more than 20 years of combined experience in the medical and law enforcement fields, Angel is known for her integrity, leadership, and commitment to serving others. As a wife of a disabled Marine Corps veteran and a proud mother of 4 boys, Angel is passionate about supporting military families, empowering others through her involvement with Women's Council of Realtors, and making a positive impact in her community. And also, I want to mention Angel is her local association president, and she is the elected 2027 Florida State Liaison. Welcome, Angel. And I also just want to thank all of our committee members, our education committee members, for all of your help and support. And thank you to our strategic partners. And we're so happy to highlight your strengths, your expertise, and thank you. So I'll pass it on to Lisa and Angel.
Hello and welcome to our Deal or No Deal education series. How's everybody doing today? Hopefully well, hopefully very well. Our panelists today are going to be Antoinette Jarrett from Coast to Coast Mortgage. She is one of our state strategic business partners. Also, we have Mike Schwartz from Guild Mortgage, another one of our state strategic business partners. We have EJ Gilbride from Hartford Funding, also one of our amazing strategic business partners. And we have Mark Anthony Gizzi from Mark Anthony Gizzi Appraisal and Consulting. Lisa, are we ready for the game? I can't hear you.
Be nice to put my stuff like that. So today for this session, we decided to add a little fun to it. You know, if anyone knows me, I'm all about engaging the class. So what we're going to be doing is, if you all remember the game, Deal or No Deal, we're going to play a little bit of that today. So part of it will be that we will have the panelists all select a case and they will give their viewpoint on it. And then before they let us know whether it's a deal or not, we're going to ask the audience to take a poll as to whether or not you would consider it a deal or no deal. And then we'll come back to the panelists for their response. So let's get started. Let's have a little bit of fun. I'm going to share my screen and just want to let you all know that I am like sometimes technically challenged. So let's get going. So let me know if you see my screen. They always tell me, what do I have to do now? Full screen. Okay. Can everyone see my screen? Hello?
Yes, we all can.
Yes.
Okay, great. All right. So now we're going to go to all our cases, and we have 5 cases. So we're going to start with Antoinette. What case would you like, Antoinette?
Do case number 4.
All right. So we're going to go to case number 4. And I'll read the scenario. And the case is, can this veteran buy the home? A veteran buyer has found the perfect home and is ready to buy using their VA loan benefit. The lender begins reviewing the buyer's certificate of eligibility, better known as a COE. The buyer has full VA entitlement and qualifies to purchase the home with no down payment, but previously used their VA loan benefit and still has a portion tied up in another property. Can this veteran buy the home? On to you, Antoinette.
Well, that's a great start that the lender is pulling their certificate of eligibility, seeing that he already has a first purchase on there. We need to calculate what he has as far as remaining entitlement. He would be using bonus entitlement once he do purchase or she purchase a home for that next benefit. So we would just need to know what the zero down is. So
Okay, so before you tell us, Antoinette, what your choice would be, let's poll the audience. Angel?
So we should clarify that everybody should put their answer in
We're in number
Number 1.
number 1. Okay, thank you.
No, I lied. We're in number 4.
Oh, we're on
we're
number
in number
4.
5. It's number 5. Can this veteran buy the house?
There it is right here.
Deal or no deal?
All right. All right. A few more seconds. Has everybody answered that wants to
reveal it.
answer?
Don't reveal it yet.
All right. Are we ready?
So, Antoinette, what do you say?
yes, this veteran is entitled to purchase another home using their VA home loan benefit because they still have entitlement remaining. So we would calculate their bonus entitlement based on what they have used on their certificate of eligibility to figure out what their max zero down is. And if they choose to purchase a house that's more than their max zero down, then they're required to put down 25%, but they can still use their VA home benefit.
Okay, so Antoinette says it's a deal. What does the audience say? Reveal.
60%. Like we said, technical difficulties on our end. 60% said deal and 40% said no deal.
Okay.
Deal.
All right, there's
So it's a
20 of
deal.
us. Yep, it is a deal.
It's a
Thank
deal.
you, Antoinette.
You're welcome.
Okay, do any of the other lenders want to speak on that or?
I think Antoinette said everything that needed to be said. She
All right.
nailed it.
All right, Antoinette. Okay, EJ, you're next. What case would you like?
Let's go with case number 3.
Okay, EJ wants number 3. Let's see what it says. Oh. One bedroom short. The buyer is purchasing a home for $425,000 with 5% down. Property is listed as a 4-bedroom, 2-bath home with 2,100. What happened? Hello?
Is
You can
everybody
continue.
mute?
During the appraisal, the appraiser finds the 4th bedroom was unpermitted garage conversion with no permanent heat source. As a result, the home is classified as a 3-bedroom property with 1,850 square feet and appraises for $405,000. What are your thoughts on it, EJ?
Well, this one is it can go 50-50, but the way it's worded right now, it's listed as a 4-bedroom. The value came in short, and you're putting 5% down. This one I'd love to give to the audience and hear their opinions, but I know what I would do on this one. So, but I'd love to hear from the audience their point of view.
Okay.
There's a couple different things going on here.
Well, let's hear from the appraiser in the room. Mark Anthony, what would you say on this?
I would say I'm going to hold what deal or no deal. And I would tell you that because it's a 3-bedroom home, it hasn't been permitted. And because it hasn't been permitted as a conversion, depending on the workmanship and the type of conversion that it was, that it would be considered a 3-bedroom, not a 4-bedroom. And that very well could affect or will affect the market value of the property.
Okay. All right. So we'll hold out on you, EJ, on deal or no deal, and let's poll the audience.
Poll still up. 1 bedroom short, number 4 is the poll question. Deal or no deal, guys? What do we think? And Beth, I saw your question in there. We'll have some question and answer time here in a little bit. And remember that question and we'll get that answered for you.
I wrote it down, but I do have a question. I didn't receive like I did before. I didn't get a
poll.
a choice.
A poll.
Okay.
We
Let
need
me
a
try that
poll.
again.
Yeah,
Hold
I didn't
on,
either.
Hold on. All right, guys, hold on. Lisa's not the only one that's technically challenged.
You guys are doing great.
You're doing awesome.
It will only let me share the
And just for everyone to know,
There we go.
attendees, we will, as Angel said, we will have question and answers at the end of the session.
So go to number 4. Is it a deal or a no deal?
All right, guys, here's your time to play and get involved. People who participate, there is a chance for a prize at the end of this session. We want as much engagement as possible.
Or should we talk about the prize, Angel?
You can while they're answering. That'd be great.
So we have, and who is the winners? How are we giving?
We're gonna do a
draw.
random drawing.
We're going to do a random drawing at the end, and we have a $25 gift certificate to Starbucks that will come directly to you from the Education Committee. So you have a chance to put your name in the drawing. Correct, Angel? That's what we're
going to take everybody's name down and then we'll do a video of the, and we'll send it out to the winner.
Perfect.
All right. What do you think, Lisa? Everybody had enough time?
Yep. Let's show it.
All right. End poll, share results. Let's do it. All right. The answer is we have 79% firmly believe it's a no deal with 21% believing it's a deal.
All right.
All right. Can I get into this one?
You surely can. What would
Okay.
you say?
So I'm going to say no deal. And I think you have 2 factors here, right? You have a contract price at $425. with an appraised value of 405 with somebody putting 5% down. So already you have a shortfall, right? On top of that, you have a 4-bedroom that's not permitted, that's going to have to be appraised, or as Mark said, if that work was done in a workmanlike fashion, somebody's going to have to explain that and get like comps. That would be my suggestion. So if it's appraised already at 405 as a 4-bedroom, goes in as a 3-bedroom, it might come in even a little bit shorter, but you're still not recognizing the fact that somebody's putting 5% down on a 425, which is gonna actually give them a little bit of a shortfall, between the contract price and appraised value. So although I'm going to say no deal, if as the realtor can go back and renegotiate, the purchase price, knowing what the appraisal stated in his appraisal, that it's there's no heating source, it's unpermitted, and not utilizing that square footage at that value. If they can renegotiate, then at that point I would say maybe you have a shot. But at the 425 purchase price, I would say no deal.
Can I interject on that to add to that also? Then there's obviously there'd be functional obsolescence involved in there, and or physical obsolescence, where obviously lack of garage now, and then no heat source. So that also might be a lender issue when presenting it as, let's call it not a living area or not base area. It would be considered an enclosed area. And now it would have obviously a lack of the garage area that would have already existed. And then you can get into cost to cure and everything else like that. So there's a lot of appraisal issues that a lender might come up with as far as even at that 405 value.
Well, thank you. All right, we have a few more cases to get through and our game time is running low. So Lisa, are we ready to move on?
Yes, we're going to give case number 1, we're going to give to Mark Anthony. So let's go to case number 1, the form factor. So Mark Anthony, a buyer is under contract to purchase a home for $475,000. The appraisal is completed on time and supports the purchase price. But just before the closing, the lender requires a new appraisal form to meet updated reporting requirements. The appraiser must revise and resubmit the report, delaying final loan approval and putting the closing date at risk. Is this going to be a deal or no deal? What's your thoughts, Mark?
Okay, so I'm not going to say deal or no deal. I'm going to say that timing wise, because of the new form that is not 100% in use yet, but will be shortly at some juncture in time. They don't even have a date yet set in stone. And depending on if the lender, obviously in this case, the lender wants it on the new form. If the home was inspected under the old format, there could be an issue of having to go back out to the property because the new form has a lot of questions and things on there, and things that might be needed that weren't on the original form's format. So timing is going to be an issue there. And I would also say that the fee of original appraisal might be an issue due to the new form itself and what they're asking for on it. And we can get into that later, but I will let everybody figure out if it's a deal or no deal from that, and we'll go from there.
Okay. So that being said, deal or no deal? Let's see what everybody has to say about number 1, the form factor.
All right. Anybody else wants to throw in their answer before I end it? Going once, going twice. Last chance. All right. And the results are 77% say deal, 23% say no deal.
I'll add to that real quick. I do think this is a deal, and I think we spoke about this on our last meeting. I don't think it's a value issue. I think it's a timing issue. I think it's just a closing delay with the new form.
And I would say that it would definitely be a deal, and I agree with that 100%. It's definitely going to be a timing issue.
Okay.
All right.
All
We have
right.
time for
Yep,
we
we
have
got
one more?
We can do one more case, and we have case number 2. This is for you, Mike. Case number 2, and we have case number 5. Which one would you like?
I'll take case number 2.
All right. Case number 2, the condo approval challenge. So your buyer has found the perfect condo and is excited to move forward. They have been approved for an FHA loan with a low down payment and favorable financing terms. As you begin the financing process, the lender discovers that the condominium complex is not listed on the FHA approved condominium roster. What are your thoughts, Mike? Is it a deal?
Well, let you guys decide. I know the answer, obviously, but some points to consider when making your answer is that there are terms like spot approval that some of you may know. There are terms like delegated approval and or DELRAP and HRAP that are possible. There are also conventional loans that allow for the same down payment as an FHA loan, if not less. And with that, I'll let you guys decide if we have a deal or no deal.
All
Okay,
right.
let's do the poll. And while we're doing the poll, if any of the other lenders or appraiser wants to talk about it, let's hear from you.
Oh, half and half.
Spot on in what he said about the different approval process. So you have multiple options to get that condo approved.
Okay.
All right.
I agree with that.
Ooh.
I think that's a deal that can be worked 100%.
Yeah, I experienced that quite a few times in the past.
And my experience as an appraiser, I think that it can be done also. It's just a matter of finding the right program.
Okay.
All
And what
right.
is the poll saying?
I'm going to end it right now. And the poll says 60% say it's a deal and 40% say it's a no deal.
Oh, wow. Okay. So back to you, Mike.
Did somebody say deal? That is 100% a deal, right? Virtually every condo complex can find a way to a spot approval. Some are very easy, some take a little bit of work, but if we want to get them done, we get them done. And the other part of that is that oftentimes we can take an FHA borrower and make them a conventional borrower and even avoid the spot approval process. But the reality is there are multiple ways to get a condo complex either spot approved or get the whole place approved, where you as the agent are now involved in that transaction and in that approval. Boy, you sure do get to do a lot of farming and marketing, since you're the one that helped get this whole condo complex approved. And any lender that is worth doing business with will gladly do that with you.
All right, great. Thank you for that. So, well, that ends our game. I hope everybody enjoyed it. And if you want, we're going to move on to the presentations from each. We're going to give each one of you an opportunity to speak, or would you guys like to have some question and answers first?
Good with either one. I know they probably have questions from the deal or no deal that we can address.
Yeah, I think we should have. So let's go. Do you have any questions in the chat? Or does anybody just want to raise?
Beth, let's start with you. You had a question I saw for sure. So let's start with you. And if anybody else comes up with a question, you can throw it in the chat or raise your hand, and we'll give us about 5 minutes to answer questions, and then we'll have our presenters present. Beth, are you still here?
If Beth doesn't come on, she was asking for, Beth, are you there? In the chat, she was asking case number 4, when will it not be a deal, Antoinette, on case number 4?
If it comes back that they have used all of their entitlement, meaning zero, you can still use a VA home loan if you have $1 of entitlement left. Obviously, that will require you to have a bigger down payment, but you can still utilize the VA home loan benefit with $1 of entitlement.
Great, thank you.
You're welcome.
I'm trying to pull up the chat.
Any other questions?
No other questions at this time on the chat, Lisa.
Okay,
So we can move on because we still will have questions after each presentation.
correct. Okay, so our next presentation is from Antoinette. This is her PowerPoint. Take it away, Antoinette.
Awesome. Thanks so much, Lisa. I wanted to cover just a tidbit on an hour and a half class that I teach at our Realtor Association, just to give some insight on VA home loan myths and kind of bust a couple of those myths in record time, actually. 10 minutes or less, talking about whether or not you can use your home loan benefit multiple times. And case number 4 told us that we definitely could use that home loan benefit multiple times based on the entitlement that you have left if you plan on retaining those properties. One of the biggest things about VA home loan benefits is there's lots of things that the VA guidelines don't tell us that is a gray area. So if it doesn't tell us, if we can get a yes from the underwriter, VA is usually fine with that, and that loan could be sold to an investor. Zero down, a lot of realtors that I've had to take my class over the years have always thought that a VA buyer, maybe had bad credit or maybe they didn't have any money down. But based on data, VA borrowers typically have 700 plus scores, have reserves, meaning they have assets to put down, but that's an earned benefit. They basically told us, the United States of America, I am willing to give my life for you. And so they wrote a blank check on their life. So that is their down payment. So when I hear people in industry that says, but they have no skin in the game, that's not true. They had all the skin in the game, but they were the fortunate ones that came back. So it is our honor to give them their VA home loan. So the zero down is definitely a myth. They do have assets to put down, but where else outside of USDA can you get a zero down loan? The myth that VA loans take longer to close. National average VA loans take 28 days, where conventional national average is conventional loans take 10 days longer. So VA loans definitely can close longer. It's not your VA loan of yesteryear where you have to send the package to the VA for approval. 99% of underwriting is done with the lender. There's certain cases that the loan do have to go to VA for final approval, but that's by case, certain cases, split loans or something of that nature. So no, you can definitely close a loan in record time. 30-day contract is typically what I ask for. Most of our VA loans close in 12 to 21 days. You can only have one loan at a time. Like I said, case number 4 kind of took care of that. You can have multiple loans. You can buy the house next door to you with VA if you want to. If you need to downsize, upsize, and the house in the neighborhood is, something that you like, you can literally buy the house next door to you. And VA doesn't have a problem with it. There's no distance requirement for that. Long as you have $1 of entitlement, that could be your next VA purchase. You do have to live in the house as your primary residence because it is a owner-occupied property loan. So you can't buy it as an investment property, but you definitely can turn your current primary into an investment property with a VA loan. Moving over to VA loans are harder to get through underwriting. Like I said, the underwriting is 99% done in-house with the lenders. only a certain few loans go to VA for underwriting. They have automatic approval. You just want to get to that yes for the underwriter. If there's a gray area with underwriting, I am queen of letter of explanations. So I think I've kind of maxed out at one loan of having 12 getting it approved, but at the end of the day, we got to the closing table. A big misconception for realtors are that the seller must pay veterans costs. In the state of Florida, there is no required cost. The seller must pay for the veteran to get the job done. They can pay if they choose to. It is definitely up to them. And also, the veteran also can have the seller pay all of their closing costs plus 4% for buying down the rate, paying off debt. It's not capped at 4%. So they can pay all closing costs plus the 4% when you're getting a VA loan and you're asking for concessions. VA appraisals are tougher. On that one, definitely not tougher. I've had VA appraisals come in with, as is, and I've actually questioned like that's, that we're good with that. And they're like, no, we don't have a problem with it. It doesn't affect the safety sanitary of the house, so they're fine with it. So it comes back as is. So that's probably the fastest I've gone through those 6 myths. But I do want to encourage you guys to download my VA Educator app. It has great tidbits in there and does answer a lot of questions that you may have regarding the VA home loan benefit. And I am done.
Wow, thank you. That was very good, Anthony. There's a lot of stuff that I had always wondered about VA loans, so I thank you for that, and I will definitely download that. So I encourage everyone on this call to download that app. We will share these slides with everyone, so they'll have these slides for the 4 presenters. That being said, next up, Michael Schwartz.
All right. You guys can hear me okay?
Yes.
Very good. All right. So, one of the challenges that most home buyers face in one form or another, or a lot of our home buyers face in one form or another, is down payment. And there's 2 sides to that coin. One is for your buyer that's buying their primary residence and just has found it hard to save enough money for a down payment. While the VA loan that Antoinette covered so beautifully is fantastic for our veterans, we do have a lot of home buyers that are not veterans, more of them that are not veterans than are, and they struggle to come up with a down payment. While there are, some of the down payment programs that a lot of us are familiar with, you probably all have heard of the Hometown Heroes program. That's a great one. But not everybody falls into that category of hometown hero. And that program, unfortunately, runs out of money all the time. So they, as soon as they launch it, within a matter of a few months, that program is no longer funded, and folks are not able to use that. Now, while Florida has some other programs that we certainly administer, those are all relegated to first-time home buyers. Right? The Florida Start, the Florida Help, all those programs are relegated to first-time home buyers. And that money has to be paid back. So they'll give you, the state of Florida would give you $10,000, which is great, but you do have to pay that $10,000 back when the home is sold, or if you want to refinance, you'll have to pay that back. Now, with our FHA zero down payment program, we give you a down payment assistance. We give you the 3.5% down that you need in the form of a second mortgage that has no interest rate, has no monthly payment, and after 36 months, it is forgiven. It converts to a grant and is forgiven. So 36 months is 3 years. So we give you the money you need for the down payment. It's a lien against the property, but after 3 years, it is forgiven and you never have to pay it back. That is Guild's FHA zero down program. What are some of the other great benefits other than the obvious? Number one is you don't need to be a first-time home buyer. This program is not at all relegated to first-time home buyers. You can be a second-time home buyer. You can be a last-time home buyer. It really doesn't matter. All FHA guidelines apply. So it is in every way an FHA loan. So the only caveats that you have are that it needs to be your primary residence. FHA, just like VA, does not allow for investment properties or second homes. So it does need to be the customer's primary residence. So as long as they're buying their primary residence, the only other limiting factor is the FHA loan limit for the county that they're buying in. Now, that depends on where you are, right? In Lee County, it's a little over $500,000 in Florida. In Monmouth County, New Jersey, it's $1.2 million. So imagine that you can buy a home in Monmouth County, New Jersey with no money down for $1.2 million, and that 3.5% would be forgiven. Very, very cool. The other neat little benefit to this program over some of the Florida housing programs, which again, I'm not advocating against, we do all of those, but the FHA zero down program, we can do down to a credit score of 600. Whereas the Florida housing programs, the Florida Start and the Florida Help, and even the Hometown Heroes program have a minimum credit score of 640. Antoinette also mentioned USDA. They have been running at right around 660 for a minimum credit score. And the USDA, again, limits you to a specific geographic area. The FHA zero down program does not have that at all. So you buy a house anywhere, buy a condo with a spot approval if need be. Very good. So no money down. Loan limit is the county loan limit for FHA for your county. Do not need to be a first-time home buyer. No income restriction of any kind. Yes, you can have co-signers. Yes, you can have non-occupying co-borrowers. It is an FHA loan in every way. We're just giving them a 3.5% down. That's forgiven in 3 years. There is no other program like that, period. We love that program. We close an exorbitant amount of those every day. The other side, that's the buyer. That's pretty obvious who that buyer is. The other buyer is someone who's selling a home and they want to buy a home. And how many people like contingent offers today? Very few, right? Certainly not if their house isn't already under contract through inspections. Hopefully that buyer's got their mortgage commitment. Then maybe the seller will entertain a contingent offer. Otherwise, nobody wants to talk to you with your contingent offer about when your house might sell someday. How do we deal with that? How do we get those people the equity out of the home that they want to vacate into the home that they want to buy? In comes the bridge loan. Now, some of you have not been doing this all that long, and a bridge loan sounds like a foreign thing. Some of you have been doing this a long time like me, and you remember when bridge loans were prevalent. They just went away for a long time. So there is a bridge loan that we do that gives the person the equity from the home that they're going to sell to use as the down payment on the home that they're going to buy. Now, the good old-fashioned bridge loan had a couple of problems. And those of you who've been around a while remember, the problem used to be that the person who got the bridge loan, well, they had to qualify to carry their current mortgage on the house that they're leaving, the bridge loan payment, and the new payment on the mortgage is certainly on the new house, certainly made it hard to qualify. And even if they did qualify, nobody wants to carry 3 mortgage payments until their house sells. Now, when homes are selling quick, that's a different story. When homes can take a while to market and sell, you guys all know what that's like today. It gets a little scary for that customer to say, well, I got to pay my mortgage and this bridge loan and my new mortgage. I'm afraid of that. In comes our payment deferred bridge loan. What the payment deferred bridge loan does is we give them a bridge loan that's not just a bridge loan. That bridge loan takes out their existing mortgage. That bridge loan gives them the money they need for the down payment. That bridge loan escrows their current taxes and insurance into the bridge loan. So, and that bridge loan, that payment is completely deferred. They make no monthly payments on that bridge. Whatever the interest that they're supposed to have been paying, that just gets added on to their payoff. So when they sell that house, they'll make the payments. If it took you 4 months, 5 months, 6 months, whatever it took for you to sell that house, they'll take that 6 months worth of payment slap it onto the payoff of the house that they're selling, and they'll pay it off then instead of going in every month. So the only monthly payment that they're going to have is the monthly payment on their new home. They're not making a monthly payment on their bridge loan. They're not making a monthly payment on their current home anymore. They're just making one monthly payment on their new home because the bridge loan is completely deferred and it has taken out their old mortgage too. All of a sudden, it's not scary. All of a sudden, they're just getting the mortgage they were going to have at the end anyway. And they're very happy to go ahead and do this bridge loan and make their non-contingent offer. The other part of that works out pretty good, all of my listing agents are very happy to report that they certainly love marketing a home when the seller isn't in it anymore. When they're in their new home and out of your hair, it's a lot easier to go ahead and show that home and market that home and not have to coordinate things when it's just you, not a whole household and family that you have to coordinate showings around. Because we've already got them in their new home, enjoying their new house. The other part of that my agents all report is it's a lot easier to get a price reduction out of somebody when they're accruing interest on a bridge loan. It's also a lot easier to get a price reduction out of somebody when they don't view it as their home anymore. They've moved into their new home. Their new home is their new home. Their new home has their stuff in it. Their old home is now just an asset that they are no longer emotionally attached to. And price reduction conversations aren't a personal affront of you calling their baby ugly. Now it's just an asset that needs to be professionally managed by you because their new baby is the home that they now live in and the only one that they're making monthly payments on. So it has been a winner and a deal maker for us and all of our agents every day. So I would welcome any questions on any of that stuff I just covered.
Thank you so much, Mike. We appreciate that. And we will definitely, I'm sure, have questions after. Next up, we have EJ Gilbride.
Hello, everybody. And thank you. Everybody can hear me okay?
Yes.
All right. So one of the big misconceptions that I wanted to go over today in lending is that if a borrower does not fit the conventional government box, they can't get financing, which is simply not true. These days, non-QM lending, and listen, I'll tell you, when non-QM came out 10 years ago, and Mike, like you said, I've been in it for a very, very long time. When non-QM came out, I was petrified. I revisited 2009 all over again. I said, this is a disaster waiting to happen. Non-qualified mortgages are exactly that. They're people that don't fit within the credit box of traditional financing. Some of them, some of the products that we use are bank statements, just qualifying off of people's bank statements, using their deposits to qualify. DSCR loans, which is debt service coverage ratio loan for investors, which means that you are just using the rental income to qualify. Going down to as little as 0.75 on a ratio to qualify, meaning that if the mortgage payment is $3,000, we'd like to be at 1-to-1, where the rental income is $3,000 and they're qualifying. The reason why I was petrified of that was, what happens if the tenant leaves? What happens if something goes wrong? And there are some guidelines and some overlays that come in, but there are first-time investors that are getting these loans qualified. And the difference is, these loans, the people they have skin in the game. They're putting down 25%, 20% on these products, and they're performing at a high level. So these alternate financing solutions have been a catalyst with us, especially in Florida. We have asset depletion, P&L only programs. Think about all the people that are self-employed business owners, real estate investors, retirees that have a ton of assets that they just don't want to liquidate to buy that home. And we have a lot of them from the Northeast that are coming down to the South that are buying, that don't understand the product of using just their assets to qualify for a mortgage loan and not breaking some of their retirement or their IRAs or some stock portfolios. Nobody wants to part with that money now, whether they're up or they're down. And I don't think a financial advisor right now is going to advise somebody to, hey, break out of your stock or break out of your portfolio. at this time in the market. So some of these products have just been a big catalyst for us, whether it's in the jumbo market, and I'm going to sway off here, but even in the foreign national space, a lot of Canadians are moving down to Southwest Florida. They don't understand the concept of Canadian mortgages are completely different than a U.S. mortgage, but we're getting them in. All they need to own is they have to have a passport, own a property in their current country that they're living in, and just convert their money over to U.S. money, and they're buying these properties as DSCR loans, and we're flying through them. So it's been big, and I think people need just the education on them. And I've been teaching here in New York and Florida. Some of these people that are going in, and a lot of it you hear in Southwest Florida, this is going to be a cash deal, or forget about the scope of the FHA and the VA and Sony May, stuff like that. But a lot of agents say, well, this guy's coming down from the Northeast or the Midwest, and it's going to be an all cash deal. Well, let me give you the opportunity to speak to them, right? So to explain the alternatives of maybe not putting down, crushing their retirement, or breaking out of their retirement and putting all the money down to buy cash. You could utilize the bank's money at pretty much favorable interest rates. They're not far off, and getting the tax benefit to write off. So, once people understand that there's alternative programs and products out there, it's an easier conversation to have. So for realtors, understanding that you have leverage, for the self-employed borrowers, where if they come to you with, hey, I make X amount of money, but I only show $10,000 on the books, it's a conversation to have. Well, maybe you should speak about bank statements or assets, utilizing different programs for non-QM lending without tax returns, without pay stubs, without W-2s. There's a need for it. It's a niche, and it should be soaked up a little bit more with some agents, and just understanding. And if anybody has any questions, I've been doing a lot of teaching on non-QM. It's been growing, and it's still growing. It's been around for probably 10 to 12 years right now. But there's an ongoing need for it, especially in the Florida market, as people start to migrate out of states like New York, California, and the Midwest. There's a big need for it. So key. If you guys have any questions in regards to non-QM, I'd love to answer them. But it's just another tool to have in your tool belt, and it's working very successfully in the state of Florida. So that's what I got for you guys today.
Well, that was a lot of information, Mike. So that's great. Thank you so
much. Try to
much.
break it down in as little as possible time.
Thank you so much. Thank you so much, EJ. I appreciate that. So we have one more presentation from Mark Anthony Gizzi on appraisals. Okay, Mark.
How are you? How's everybody doing? I just that's the big question, and as far as the highlight of this Q&A on the appraisal side is the new 3.6 form that's coming out, or has yet to come out 100%, but is coming out shortly. And what that means to realtors, what that means to appraisers, what that means to lenders. Basically the new form has been made to, it's completely different from the old version form that's there. What they have done is they have took out the narrative form of the appraisal reports that we currently utilize, the form that we utilize, and made every part of the form to be self-contained. So every room, laundry rooms, bedrooms, bathrooms, living rooms, kitchens, everything has its own section within the appraisal report. And within that report, the photos for each room need to be placed in that section. The explanations of floor covering and type of walls and type of fit and finish need to be addressed within each section of the form for each room. It, for lack of a better word, what they did was they made it more later on, which again, what they did with UAD in the current form of appraising, they brought everything down so they can put it into a computer for checks and balances on properties that sell and comparables that are utilized for those valuations in order to get basically a big conglomerate of data on every house that moves and sells on the market, in order to better have, let's say, more accurate appraisals and take out the need for objectiveness from appraisers, because now you have a total, like 10 appraisers are reporting on one particular house or one particular comp. And now all those 10 appraisers, if 9 of them are saying that it's this and one of them says it's not, there's a check and balance for that one or two appraisers that are reporting it differently. So in that aspect, the new form really zeroes down on reporting. It's a much longer form. It's a much more involved inspection process in the field. I would expect, as it comes online and more prevalent with lenders, because of the amount of work and the amount of things that are entailed on the new form, it different from what the old way of appraising was. I would venture to say that there would be an overall fee increase as far as on the appraisal side of things. Yet to know what that possibly could be. But it does entail. So let's say a current form might be 4 pages long. The new form, I think, is 8 or 9 pages long, incorporating more checks and check marks than narrative formats. As far as what that means overall in evaluations of properties, I would, the hopes are to make appraising a little bit more accurate and a lot less objective or in somebody's eyes, and give it more checks and balances, more so than what happened after 2008's downturn in the market. Other than that, on the form, I'm sure people will have questions and things like that. And moving forward down into, right now we're in the Florida market. We're experiencing, a very, let's say, slower market from COVID years and things leading up to. We've dealt with storms and things like that. So appraising in a slower or declining market has tend to be a little bit more difficult as far as to the realtors, only because you're probably starting to see in some cases, appraisals not toting the purchase prices and coming under. And that's only because of, homes that are selling because of motivation factors, because of the amount of inventory in the market. That's really what is happening right now, is in having appraisals that are coming in less than purchase prices. An easier way to combat that when you're discussing things with appraisers is, look at the active market, look at the pending market that exists, pending sales that are under contract that might help support the market value, other than three or four of the last most recent sales that would be similar. That'd be something to propose to an appraiser, that a lot of times appraisers don't use those. They concentrate on the close side of the things. And moving a little bit further down and discussing adjustments, I'm sure people have, there's ideas. How much do you adjust for this? How much do you adjust for that? In certain avenues of appraising, I can leave that up to maybe somebody might have a question for that later on. I can answer that. There's, kind of, set in stone in a certain marketplace and a certain price point of what something's worth to a willing buyer and willing seller. And I can relay those kind of numbers to you in a question and answer format. And other thing is, private appraisals versus mortgage appraisals. I do, at this current time, I tend to do a little bit more on the private side than the mortgage side. I've been in business in Southwest Florida for the last 32 years. So I have a big conglomerate of referral business. Most of my business is referral. And on the appraisal side of things, on the private side, such as estates and divorces and just straightforward private market value appraisals, a little bit more unrestricted, not restricted to a mortgage type form or a mortgage type restrictions on reporting. So there's a major difference within there. And last on my list is dealing with appraisal management companies and what their tool is in this market, which basically started after the 2008 situation, where it's a blind situation of who is receiving the order for an appraisal report. The lender or mortgage person is responsible, someone who is not making a commission off of the actual sale or the actual refinance is the person that needs to be not involved in the ordering process. So they came up with appraisal management companies, which there are thousands of them throughout the country. Certain lenders use certain ones. And that's the reason why that's being done, is to take the person that's involved in the situation and having any kind of swaying towards an appraiser in either direction as far as value is concerned. They kind of take that blind situation of ordering, and that's kind of gives the appraiser protection from being coerced in any direction as far as values are concerned, and doing a more accurate job. So I know that we're coming to the end of all the presentations and timing, so kind of would just like to leave this up to any questions and answers that people may have, and we can go from there.
Okay, thank you so much, Mark. Yes, so that basically concludes most of our session today. But before we move to question and answers, I do want to take the time to tell everybody a little bit about our panelists. We have E.J. Gilbride. He's the Chief Culture Officer of Hartford Funding Limited, or LTD. He is a highly respected mortgage industry leader with 27 years of experience helping build high-performing teams, driving sales growth, and delivering exceptional client service. Known for his leadership, industry expertise, and commitment to fostering a strong company culture, EJ has played a key role in Hartford Funding's success and reputation as a trusted mortgage lender. Beyond his professional accomplishments, EJ is a devoted husband and father of 4 who values family, community, and service. His dedication to giving back is reflected in 15 years as a youth football head coach and his role in founding the East Moriches, I hope I said that right, middle school football team, and earning him the Scope Education Service Community Service Award in 2017. A stage 4 cancer survivor, EJ exemplifies resilience, perseverance, and leadership, inspiring others through both his personal journey and professional achievements, while encouraging everyone to #win the day. Thank you, EJ.
Thank you very much.
We also have with us today was Antoinette Jarrett, is your trusted mortgage partner, bringing over 20 years of financial and mortgage experience and a true team-based approach to every client she serves. As a licensed Florida real estate school instructor, mortgage advisor, and Freddie Mac Credit Smart instructor, she is passionate about education and empowering her clients to make confident decisions. A dedicated advocate for veterans and active duty military, Antoinette holds both veteran mortgage advisor and certified veterans lending specialist designations. Whether buying, selling, or refinancing, she is committed to being your strongest asset every step of the way. Thank you so much for being with us today, Antoinette. With 30 years in the mortgage industry and still building momentum, Mike Schwartz, branch manager of Guild Mortgage in Cape Coral, proves that long-term success comes from experience, relationships, and genuine partnership. Since opening the Cape Coral branch in 2024, his team quickly rose to becoming the top producing guild branch in Florida, and they're still holding strong. Known as a trusted resource for realtors, Mike invests deeply in agent education, support, and collaboration. With his wife Anna running operations, a veteran team by his side, and a passion for serving Southwest Florida, Mike continues to thrive in every market cycle. Because when you love what you do, it doesn't feel like work. So truly said, Mike. And thank you again for being with us today. And Mark Anthony Gizzi, a seasoned residential real estate appraiser with over 32 years in the valuation industry. He has successfully managed a high volume appraisal office in Southwest Florida and currently owns and operates a full service residential real estate appraisal company. Known for his strong work ethic, attention to detail, and commitment to accuracy, Mark has built a reputation for delivering quality appraisal reports with exceptional turnaround times. His expertise, research abilities, technical proficiency, and dedication to client service makes him a trusted professional in the real estate community. Again, thank you to each one of our panelists today for joining us. And now we're going to open it up to question and answers. Anybody have any questions for these experts?
If you want to
I
raise your
do.
hand and, oh, there we go. Who is that?
So I had, like you said, Angel, I had a litany of questions. So, and I wrote them down. So can we go back to the appraiser? What can we as listing agents do to help the appraiser to make sure that they appraise it accordingly?
Good question. Especially with the new form coming out. Like I said in the when I was talking, every room, the most accurate listing in your listing, when you actually do your listings, putting the most accurate information on a per room basis, giving a good, because I myself look at those, the write-ups on every listing, on every house, any type of good information that you can include on a per room basis moving forward, more so than just, hey, this house has, pergo floors or wood floors or carpet, again, filling out what rooms that are in the house. So that helps us out a little bit more. The photos that you guys provide in your listings definitely are something that I like to look at also. Not so much even on my subject side, is you guys help me out tremendously on the comparable side. And going back to what I said before in regards to, I don't mind. I'm the type of appraiser that doesn't mind that if, hey, here's a couple of pending sales that just took place that are similar, or here's a couple of active listings that are similar to the house that, meet, exceed, or come, close to the selling price of the house, to just give that appraiser kind of a heads up on those. Not that they should be finding those in their research, but, helping that appraiser out in that respect could go a long way.
Thank you. Okay, I have another one, Lisa. Can I ask it?
Go for it.
Okay, so going back to the VA, I wanted to know what is those most oh wow, what was my notes on this? On what is the benefits like on the VA, like that the veterans may not know? Like what are the like a benefit that they don't? What's the biggest benefits they don't know that we should be asking?
Well, not necessarily you should be
Other
asking, but lenders don't ask that question. The biggest thing is they don't know that they can use their VA home loan benefit more than once. They don't
Okay.
have to wait for that big house.
Okay, thank you.
Yeah, so that's really it, that they have a benefit to use. And you also can use it for a fourplex as long as you live in one side.
Okay, thank you.
You're welcome.
Great questions. Angela?
Lisa?
Angie?
Sorry, I had to unmute. Thank you. I'm curious, and I don't know who to throw this question to, but I'm sure one of the panelists will be able to help us. I'm just curious about limitations on zero down payment loans, and who can talk to us a little bit about that.
Well, I would love to talk to you about that. So it depends on the program, right? I mentioned a few of them. So every program has their limitations. It's about identifying which scenario fits the customer best, right? VA is a great zero down program. It's everyone's favorite, right? But the big limitation is it's for the veteran, right? So if you're not a veteran, VA's out. USDA is another great zero down program, but unless you're buying in a very specific geographical area and you are under a certain income threshold, if you don't meet those limits or exceed those limitations, you're out, right? So then you start to whittle things down. The Florida programs, the Hometown Heroes program, which you guys are, get peppered with that kind of advertising for it. One of the limitations is they run out of money, number one. Number two is you have to fall into a specific vocation. So if you don't do a specific job, you don't qualify for that program. So it's finding what the limitations are. So those are the limitations of those programs. The FHA zero down program specifically has the fewest limitations as compared to all of the other zero down programs. The FHA zero down program allows for you don't have to be a first time home buyer, which all the other ones, other than VA and USDA, but all the other specialty Florida programs require you to be a first time home buyer. With the FHA zero down program, you don't have to be. You are allowed to have co-signers. You're allowed to have non-occupying co-borrowers, which is a specific designation that the other programs do not allow. There's no specific vocation. There's no income restriction. The only limitation on that program is the loan amount cannot exceed the county loan limit for FHA. And you can just look that up. Every county is going to be a little different, but all of them are over $500,000. And in some counties, you get north of $1 million. And the minimum credit score is 600. So all of the other programs that we all do, those get higher. But with the FHA zero down program has the least restrictive limitation, which gets you down to a 600. So there you go.
All right,
Thank
great.
you.
Thank you so much.
Melissa, you had a question?
Next, we'll go to Kwana. She had her hand raised. We'll go to her
I'm
next.
sorry. I can't see the whole thing. Sorry.
That's okay.
Yes, I have a question for Edward.
Sure.
What types of income documentation? What types of income documentation are not commonly accepted for non-QM financing?
It depends what product. So on a DSCR loan, it's just if it's a purchase, you're just going to go off of the 1007, which is part of the appraisal, which is the rent schedule, right? Your bank statements, what you're putting down to show the source of down payment, 2 forms of ID. It's very, very minimal documentation. DSCR is essentially a business purpose loan. So there's a business purpose affidavit. It's got to be done as an investment property. It can't be done as a primary residence. Let's go into bank statements, qualifying off of bank statements. It's 12 or 24-month business or personal. It's based off of the deposits. The default is usually 50% of the deposits is used as income as on a monthly basis. Okay. But you could go up to 80, sometimes 90% with a CPA letter verifying that the expense ratio for that business is either 10 or 20%. Okay. Assets, if somebody has good assets, very strong assets, it's a calculation based off of their some 72 or 84 months of their assets. That's how it's broken down to use monthly income for that. And as far as foreign nationals, it's minimum documentation. It's a passport it's proof of ownership in their country, and it's bank statements, U.S. converted bank statements to, and that's also a DSCR loan, and it's the appraisal. So very limited documentation, and there's a lot. It's, now they're starting to stretch the envelope a little bit, going to 85%. And on a full doc loan that falls out, with some other issues that don't qualify, you can get to 90%. Obviously the rates are going to adjust that much higher, but there's some good flexibility outside of the box of square one.
Right. Okay, thank you.
Okay, we had a few hands raised in the think Angel, can you?
Who asked that last question? I just didn't see. Was it Quana? Were you able to get your question asked?
Yeah, that was Quana.
Okay, perfect. Melissa, you had a question?
No, I did not.
I do.
I don't know who I do is.
Suzanne.
Oh, hi, Suzanne.
Hi, I've got an appraisal question. So what impact will the new appraisal form have on real estate transactions, and when is the new form effective?
Okay, as far as the date of effectiveness on the new form, it keeps changing. Because it's such a big transition. There's a lot of different there's about four different appraisal software companies that need to implement it, make it work, do all that stuff in that respect. So the last I heard was October, November. As far as coming it online, there are some lenders that are actually, depending on programs and different things, and they are asking for it. It's not required by Fannie and Freddie right now. So there's no really effective date as of yet. The effect on, and what was that first part of the question? I'm so sorry about that.
No, that's okay. I just wanted to know what you felt the new form was going to have on real estate transactions, like what effect?
I don't think that there's going to be an effect. I mean, the effect's going to be, I think, timing. I think that is the reason why they're kind of slow playing the release of this, or making actually, a drop dead date that every Fannie Freddie product that uses a 1004 form, which is the appraisal form, the version of it is now called 3.6 versus 2.6. The 3.6 version is, like I told you before, by room and a lot of other non-narrative based check boxes within the report. I just think it's going to be, the effect is not going to really affect the overall market value because it's the same type of process. It's more of a reporting and timing issue.
Thank you.
Renee, you just raised your hand?
Yeah. So this is a general question. Do you have to be a first-time home buyer to qualify for down payment assistance?
No, you do not. Absolutely not. There is no first-time home buyer requirement for the FHA zero down program. Certain programs you do, and quite a few programs you do, but there are absolutely programs that do not. This one specifically does not require to be a first-time home buyer.
Great, thank you.
Beth, you have your hand raised, and then after Beth, we're going to go to Lisa. Beth, you still there?
Sorry.
That's okay.
So jumping on Renee's question. So what's the biggest disadvantages of the FHA loan for today's buyers then?
Well, I would say there's no disadvantage at all. That's a great question. There is no disadvantage, right? So if a customer needs down payment assistance, if they're not a veteran where they can use VA, right? 99% of the time is going to be an FHA loan anyway. So all of your Florida housing programs work best when done in conjunction with the FHA program as it is. So with this particular down payment assistance program, the Guild Zero Down program, it's another down payment assistance program done in conjunction with an FHA loan. So 99% of the time, it's always was and it was always going to be an FHA loan. As far as Disadvantages, there really aren't any, right? FHA, big picture versus conventional, one could make an argument that when it comes to the mortgage insurance, you're going to pay the mortgage insurance in theory for the life of the loan with an FHA mortgage, as opposed to a conventional mortgage where it would go away once that person reaches 20% equity. But for the person that's putting little to no money down, the mortgage insurance on a conventional loan is often considerably higher. And the interest rate is considerably higher than they would get with a comparable FHA loan. So the savings in the mortgage insurance payment and the savings in interest rate quite often negates any benefit, to going with a conventional loan in that case. Now, if someone's putting 20, 25, 30% down, we're not talking, or even 5 or 10 or 15% down, we're not talking about down payment assistance anyway. They don't need it. But for the people that need help with a down payment, it's always going to be done in conjunction with an FHA in some way anyway. I hope that answers the question.
All right. Thank you.
Okay,
All
I have
right.
a question. This probably come to you, Antoinette, and this is coming from a seasoned realtor. This is something I experienced um quite a while ago, and I wanted to see if it's still in existence. So I had a VA buyer wanting to buy a house. He was trying to buy a house that he needed a co-borrower, but it wasn't his spouse. So we were told that they could not use his VA benefit entitlement because they were not a married couple. Is that true still?
That has never been the case. That lender had an overlay in which they did not allow joint loans. You can put a non-borrower on the loan. It will trigger a down payment of about 14.38%,
Okay.
having a non-spouse borrower on the loan. But yes, it can be done.
Okay, so they just have to put a down payment, so they can't
Yeah,
use.
so that lender had an overlay and said that it was a VA thing, and it wasn't a VA thing. It
Okay.
was a lender thing.
All right, great. Good to know.
Yeah,
Thank you for that.
you're welcome.
Any more questions in the queue?
No, ma'am.
Okay. Well, that completes our session today. Thank everybody for coming. I think that our chair, Renee, would like to speak. Renee?
Thank you, Lisa. So before everyone leaves, because we're going to announce, Angel is going to announce the winner of our drawing. But first, I just want to thank everybody here today for all the attendees. Big thank you to our panelists, Mike Schwartz from Guild Mortgage. Our panelists are also our strategic partners. Just want to make sure everyone knows that. So Mike Schwartz from Guild Mortgage, Antoinette Jarrett from Coast to Coast, EJ Edward Gilbride from Hartford Funding, and Mark Anthony from Mark Anthony Gizzy. I hope I said that correct. Appraisal. So thank you so much. And for our moderators who are also part of our education committee, Angel and Lisa, and you guys did a great job putting this PowerPoint together. It was a lot of hard work. I want to thank the education committee also helping, and my co-chair, Alexis Bolin, who is not feeling well today, but all of us contributed, and so big thank you. But if you wouldn't mind if I could just tell you a little bit about our education coming up, because we've got some exciting speakers coming up and sessions. So I just want to let you know what's next. So our next session is July 15th, and the title is Showcasing Your Value. If you're not worth it, you're not getting paid. So that's from 2 to 3 p.m., 2 to 3 p.m., sorry, Eastern Standard Time. And this will be with, let me see if I can pull that up. Yes. So we have three of our strategic partners, Nathan Carver, Between Two Doors, our podcast. He's a podcast guy. And our two realtor strategic partners, Gia Arvin and Beth Beckert. So this will be exciting. So I hope that everybody will come and join and learn some value from them about, strategies of what they're doing in today's market. And next, well, you'll know in August, Orlando conference, Monday, August 17th, and Tuesday, August 18th is filled with amazing speakers all day. So we have people from all over the country coming in to speak on the silver tsunami. We have the $1 Million Mindset. We have a legal panel. We have another great top producers talking on Tuesday, an AI specialist, and somebody else that I'm probably forgetting. But anyway, so there are 6 total sessions. So please make sure it starts at 1 o'clock on Monday, the 17th, and the same on Tuesday. It starts in the afternoon at 1 p.m. And then in September, September 10th, we have a session on 1031 exchange, which is going to be amazing. October 7th, business etiquette. Our speaker there is Catherine Sakis, which is our president-elect for state Florida president-elect for 2026. So she's going to talk a lot about business etiquette. November 18th, we have business planning. And we have the CEO of Star Power, Amy Stour. I'm probably not saying that right, so I apologize. But anyway, so please just mark your calendars. We appreciate everyone's support. And I am now going to pass this on to Angel so she can announce, and you can tell them how you did it, Angel, because it's pretty cool on your app, the winner.
All right. Thank you again. Thank you so much for joining us. I put everybody, all the attendees, sorry, panelists, I left you out, but I put all of our guest attendees into what's called wheelofnames.com, and it gives you like a wheel of fortune thing, spinning wheel with everybody's names in it. I wish I could share it with you, but again, I'm not that technical savvy. However, our winner is Alicia Boateng. She has won our Starbucks gift card. And we are very, very grateful for everybody coming and spending their time with us, especially grateful for our panelists. I think all of us have taken back some sort of information that we might have more questions on one time, so we might reach out to you, but definitely shared a wealth of information and knowledge to all of us and our attendees. Thanks for coming.
Thank you, everyone.
Thank you, everyone.
Have
And
a great day.
have a great rest of your week. Again, like everybody said, thank you so much for being a part of this session. Hope that you were able to get some questions answered. And thank you to our panelists for the wealth of information that you shared with us today.
Bye, everyone. Thank you.
Bye.
Thank you. Thank you very much.
Thank you so much.
Thank you.